watching the MEM live show. This is the show where we put you in front of where the action is in the broader markets. And certainly we have a lot going on despite this holiday shortened week. I'm going to go ahead and take us to a view of the S&P 500. What I'd like to do today is go ahead and start out by reviewing the broader markets where we are. And then from there, we are going to go ahead and drill down beyond the broader markets, get a sense of where the strength is within the markets. There certainly are pockets of strength that are benefiting from the trade talk truce, if you will. And from there, I'd like to help you uncover those stocks that are in those areas that are showing pockets of outperformance, because these are the areas and stocks that are going to be able to benefit the most from the trade talk positive news over the weekend. And from there, we're going to drill down to various time frames of charts, because the rally that we are getting, the strength that we're getting this morning, it may or may not last. Realistically, while Trump and Xi have agreed on beginning trade talks again, realistically, we're not anywhere near a resolution. So you're going to want to know if you are entering these stronger, more outperforming type stocks, you are going to want to have an exit plan. So we're going to go ahead and get into that as well. But let's go ahead and get started here with the broader markets. We are looking at the S&P 500. This is a daily price chart. For those of you watching regularly, you'll know that I overlay these simple moving averages on top of the price chart. So we can see this green line is your 10-day, red 50, blue 200-day simple moving average. And quite simply, you would like to see the index as it is trading above an upward trending 10-day simple moving average. Of course, we've had that gap up today, and it is continuing on with this uptrend. The RSI is above this net neutral -0, also trending upward. And take a look at the stochastics. This is another momentum indicator, and we do want that stochastic to be above that 50, ideally trending upward, and we do have that occurring as well. By all accounts, the S&P 500 is hitting another new high in price today. So we can see by all measures that the S&P 500 very much is in an uptrend. So we know we have the strength and the positive action of the broader markets behind us. Let's go ahead, and I talked about drilling down further. We want to be able to capture where the current strength is within these broader markets. So what we're looking at here is a candle glance view. These are 2-month charts, and what I've done is I've gone ahead and populated these with different indices and sectors. So up here you can see we have the broader markets, the Dow, the NASDAQ, the S&P, the Russell 2000, and I also put IBB, that is the biotechnology index, which has been really moving. We'll take a quick look at that, as well as other various sectors within the S&P. From here, you can go ahead and add an indicator. I've added the RSI, and go ahead and sort that in descending order. What that is going to do is provide you with a really succinct view of the strength, so that your stronger areas are up here in the left, and as we drill down to the farthest lowest right side is what is called the weakest area, and that's your 10-year treasury. But let's go ahead and start looking at the Dow Industrials up here in the forefront. Last month, the Dow had their strongest month since 1938. So really super powerful period for the Dow Industrials. And we can see that today it is gapping up again. A lot of these industrials are going to be benefiting from a proposed U.S.-China resolution. So a lot of larger and blue caps large caps have been leading the markets of late. And then from there, we can see the S&P 500. The financials, for those of you that don't tune in super regularly to the markets, they were the best performing sector last week. We're seeing a continuation of that move, which is really quite bullish. You want to have the financials participating in the broader markets. It provides solid footing for further upside action. And then next, of course, we have technology. And technology did have an okay week last week. However, they're really powering 2% today. We'll go ahead and get into where that strength is within technology, because this is all about US-China and the fact that Trump did release those sanctions against Huawei, and that is the largest Chinese technology company. I have a list of companies that sell directly to Huawei, and they will benefit. So we will go ahead and get into those names within technology, and then so on as we drill down. These are the biotechs I talked about. Take a look at this action over the last several days. And in fact, 2 weeks, we can see that technology is now poised to break out of this short-term base. This also is quite constructive for the broader markets. Biotechnology stocks are quite volatile. When we see money flows into these biotechs, it's a signal that there is confidence in the market. So we have a lot going on that's positive. I wanted to point out to you here in the lower range here, we're seeing a continued deterioration in utility. These higher yielding stocks, defensive plays, are starting to move a bit out of favor. So we can then take an eye and look more toward areas of strength that are playing into this current market environment. So let's go ahead to StockCharts.com, and I will review with you how to go ahead and get on top again where this strength is, with an eye for outperforming these broader markets. So we're going to look at sector summary initially. We can see technology is up almost 2% today. I talked about that being a particular area of strength. So from there, we can click on and access the sub-industry groupings within technology. And sure enough, it is semiconductor stocks. For those of you not aware, semiconductor stocks derive a large part of their revenue from China. They are selling directly to China. These stocks really, let's take a quick peek at the chart, and you'll see that they had a very tough period in May. And during May, that is when, this period here, that is when trade war fears really took hold for the broader markets. The broader markets pulled back, but semiconductors got hit the hardest. Take a look at this gap, up 3% today on the news, again, that the sanctions against Huawei, but also that trade talks very well could be resuming. So getting back into this grouping, I'd like to share again with you how you can uncover stocks. Now, initially, it is going to provide you a list by performance. So we can see these are your better performing stocks. Interesting. But what you really want to key in on is this StockCharts tech rating. This is going to be your scooter, and this rating is providing you with a really powerful sense of those stocks that are technically the most sound. So even if NPTN is experiencing a very significant move, it's a small cap stock, that scooter rating is going to be way too low to be of interest. So I'm going to go ahead and resort that. Now we are looking at a very vibrant list. These names that have higher scooter ratings are your most technically sound. We can see Advanced Micro, LSCC, Cypress. These are all very, very good stocks. Applied Material, and by that, I'm going to go ahead and show you the chart, but there's a reason that these charts are technically sound, and that has everything to do with fundamentals. So this grouping up here is where you are going to want to focus your energies. Now, AMD may be a bit advanced, but let's take a look. In fact, it does still have room. This is a stock, when you are looking at semiconductor stocks and you are looking for stocks that you want to participate in with this move to the group, you do want to see stocks that have had hit a prior high. That this is taking us back to June. And the reason is this stock hitting a new high back here. There are very sound fundamental reasons that are driving this stock higher. Advanced Micro is very involved in providing chips for gaming and other very vibrant areas. So this stock hit a new high back here for very sound reasons. Those reasons a month later are very much still going to be the backdrop and in play. So not only do you have a stock that is technically sound, because this stock really only pulled back to its 50-day simple moving average. Most semis fell well below their 200-day. So another positive constructive feel for Advanced Micro. And we can see the stock is now potentially forming the right side of a base. Also taking a look at this RSI is positive, as is the MACD. So this is a very, very constructive looking chart. And I'm going to go ahead back to our list, and we can quite simply take a look at some of these other stocks that, again, are very sound. They look quite constructive here. So here we are. And I wanted to compare that to another, a stock that is not so technically sound, so that you can get a sense of the difference when you have, this is a stock in the semiconductor space that has a scooter rating that is a bit lower. And indeed, taking us back to that May period, it fell below all of these simple moving averages, not quite as attractive looking. However, it is gapping up 6% today. This is a pure Huawei play. These guys do sell directly to the company, so they are poised to advance because of that news. But we can see the RSI is positive, MACD poised to now turn positive, so we could further advance from here. So going back to our listing of the semiconductor stocks, let's go ahead and resort by this scooter. I also wanted to show you that you can then overlay your cursor, and it will provide you with a snapshot view. And for those of you that are less inclined to buy stocks that are hitting new highs, you can take a look at stocks that are potentially reversing and are a little bit earlier in their advance. This is Xilinx. The stock's up almost 3% today. What you want to see is a stock that is trading above these simple moving averages. We now have this green 10-day simple moving average has crossed up above the red. That's called a golden cross. Quite simply, it's telling you that the positive momentum has picked up in this stock. We can see that the RSI and the MACD are positive, and the overhead supply, and by that I mean buyers that came in, is going back to this April period. So it is far enough away so that the stock is freer to advance. So that's a look at the semiconductors and ways that you can capitalize on the move into that area. Let's go ahead back to technology. I want to take you to another area, but before that, we do have a little bit of a break we're going to take here. And with that, I will be right back.
StockCharts is unique because we combine the commentary, the education, as well as the tools in which you need in order to analyze the markets.
The human component around it with all the commentators that we have. I mean, look at the lineup with Murphy and Pring and Morris. These are household names in the industry. They're all tied to StockCharts.
People are always surprised with how many tools are on there that they didn't know about. 5 or 6 different methods for finding relative strength, as an example.
Not only do we have these really great chart tools, but we have this amazing chart school, and you have these shows, and you have all these ways that you can learn.
Welcome back. We are continuing to take a look at technology with an eye toward those companies, those areas that will benefit from the currently positive environment given the trade talks resumption. So here we are looking at the technology sector, the sub-industry groupings. We went ahead and looked at semiconductors. Let's go ahead and take a look at soft footwear stocks. And this is an area that sold off rather sharply last week, recovered toward the end of the week, but it is another area where there are software cloud-based that are going to benefit because they provide services to the semiconductor space. So what I've done here is quite simply, again, looking at the sub-industry group, it's providing you with a list of those that have outperformed. From here, we are going to want to go to that scooter rating again. And now we can take a look at some of these stocks that are up here in the forefront that are potentially poised to benefit from the China-US trade talks. So let's go ahead and drill down. I talked about the ability to go ahead and hover over these stocks, and you can see many of these names up here in the forefront are already at highs, at new highs. But what we can do from there is go ahead and take a look at some of the names that are a little further down in this scooter rating. In other words, they're not hitting new highs, but they could very well be of interest given the market dynamics. And this one that we can take a look at is Momo. These guys are an internet content provider. It is a China-based ADR, and we can see that it has been advancing with the China market. It's gapped up 4% today, and it's continuing to advance. So that is a way that you can go ahead into the sectors, go into the sub-industry groupings. I'm going to take us to another area that got hit in May, all because of the China trade war fears, and it is an area that is rallying today. So here we're looking at all the broader sectors, their sub-performance today. I'm going to take us to consumer discretionary. And the reason is because a number of retailers got hit, and it was all about tariff fears. Also, there are retail-related companies that manufacture their products in China. So there were fears as far as them being hit with tariffs that would have them higher their prices. So from here, let's go ahead and drill down. Let's take a look at footwear. These gambling stocks, a lot of these are going to be China related with the recovery in the Chinese market, but I'm going to take us to tariff fear related stocks that are recovering. So what we're looking at here are within the footwear, we're looking at those stocks again initially that are up the most. We can see Crocs is doing well, a low scooter, so this would not be attractive to me. But the second in line here is Skechers, SKX, a nice high scooter rating. I happen to know that Skechers does have their products manufactured there. It is a China play, so these guys provide sneakers and footwear for active individuals. So let's take a look at the actual chart of SKX, and we can see that it deteriorated again with those trade war fears in May, but it is coming back. The stock very constructively is now trading above each of these key simple moving averages. The RSI is positive, as is the MACD. Now, I talked about taking a look at various time frames of charts, but actually what I would like to do with that in mind is go ahead back to some of these semiconductor stocks. I'm going to go ahead and pull up Micron, MU, and we can see that the stock, again, deteriorated in May, is gapping up almost 6% today. So we're looking at a daily price chart, and this daily price chart is going to be quite useful because we are going to be able to see the price performance relative to the simple moving averages. It has gapped up. And from there, this is a bit of a larger view. We can see that the RSI and your MACD just now turning positive. So on a daily chart, you can use this for shorter term trading. I'm going to go ahead and drill us down even further. What I'd like to do is take us to an intra-day chart. And this is all with an eye toward having you, giving you more tools as far as knowing when the potential uptrend may be over. So I like to use the 1 hour chart for intraday charting. And what we can see here is something that you can use again in your trading. We can see that the RSI is now over bought. We're up here above this 70. It can remain here for quite some time, but really it is quite simply telling you that the stock at some point in time will drop. So we want to use history as our guide. I'm going to go ahead and change the simple moving averages down here so that it is more in line with the intraday charting. I like to use a 5 and an 8 so that we can then get a better feel for where the stock's price is on an intraday basis. So we are looking here, the stock's price is above on the 1 hour chart. It's above these simple 5 and 8 hour simple moving averages. But what we want to do for historical precedent is be on the lookout for, again, using intraday, the negative action that would signal to you that short and near term, the uptrend may be over. The first action would be a price break below these simple moving averages, and then your RSI turns negative, and we can see the MACD also turn negative. So all of this is happening in the very same period. So in conjunction, we're getting 3 signals that this uptrend very well may be over. And we can see we have downtrend reversal attempts, but we don't quite get that signal. The RSI did not turn negative. Your MACD did not go up above this net neutral zero. So that reversal is a failure. And we can go back down here in time. We did get this is the end of June, around mid to end June. We did get this period where this downtrend reversal attempt took hold, but it faltered quite quickly. So in the event that you do have this, so right now we are very much well above these simple moving averages in an uptrend, but when they fail, they do so rather quickly. So we did have a 2-day uptrend period, but then it broke back down below these simple moving averages, and the uptrend, again, it did fail. So that's how you're going to want to use these shorter term charts. For those of you that are more active traders, you want to know when that uptrend could potentially be over. I'm going to go ahead and pull us out to a weekly chart so that you can, this is for your longer term trading, your bigger view, because the weekly, of course, is not going to have all of that diciness, if you will, and all of that volatility. So with the weekly, we can see that it's only this week that we are turning positive on the longer term view, because now the RSI has turned positive. On the weekly, we have a 10-week or a 50-day. This is your 40-week or your 200-day. So we need to see the price break back up above these simple moving averages. Your RSI is positive. MACD is just now having that black line up through the red positive crossover. We're not quite in positive territory yet, so we're not getting confirmation on the weekly. And realistically, when you are looking at a period back here in 2016, a very healthy uptrend, you had dynamics where your MACD, your RSI were positive, but more importantly, your simple moving averages were in an uptrend. So we go back to this period, we can see that we have this nice gap up, but realistically, your moving averages are still trying to recover. So we do still have work before we are in a longer term, really confirmed type of uptrend. Certainly, we have a good start because we did see this gap up. We're not getting quite a bit in the way of volume quite yet, but again, we could very well be on our way. So ideally, what I'm wanting to show you here is how these different time frames of charts are going to provide you with different outlook. This is Broadcom AVGO, another benefactor from the Trade Talk renewals. We can see that in essence, Avago or Broadcom never really got negative because the MACD stayed above this net neutral zero. The stock found support at this upward trending 200-day simple moving average. The RSI dipped, but not quite so much. So if you were have been using the longer term chart with Broadcom, you would have stayed with the stock. However, looking at a daily price chart, it would have been entirely different because you would have gotten all of that volatility and you may have been shaken out of the stock. So this is Broadcom, same chart, daily view, and you can see just how choppier it gets when you drill down into your time frame of charts. And then one last, we can take a look at the intraday, again with an eye toward using this view to identify, taking us back to that May period when that uptrend was reversed. Price breaks below the simple moving averages, MACD, RSI turn negative. So for now, this is another one that has had that gap up, big volume, and your other outlying indicators are very much in positive territory. One last area that I wanted to go ahead and share with you is some of these Chinese ADRs that are really looking quite attractive. So the first area and the first item that I did want to show you is the China stock market, MCHI. This is an ETF that mimics the Chinese stock market, and we can see that it is in the process and throes of reversing this downtrend and recovering up to 2% today. So from here, I'm going to take you down and take a look at some of these stocks in the China, but they are listed in the US. They are ADRs. First one that we can take a look at is EDU. This is a company that provides after-school tutoring, and we are looking at a daily price chart. You can see that the stock is, let's just go ahead and get a better view here so that we have proper simple moving averages. The price is above these simple moving averages. It's hitting a near-term high in price, which is very constructive, gapping up on volume. MACD and RSI are quite positive. I can show a couple more here. BZUN is another China-related stock, and we can see that it gapped up quite nicely, 9% today. So it's a bit extended. I would look for a pullback, but quite clearly we have reversed this downtrend, shorter term key moving averages up through the longer term in that golden cross. But this one is very constructive, but again, I would be looking at that on a pullback. And I have just show you this one last name, and I will have to leave it at that. This is an internet provider, JD, a top retailer in China, and we're going to go ahead and leave it at that. For those of you trading this week, happy trading.
This video will show you how to add a date line to your charts. So if you have a whole bunch of stuff piled up here and you want a date line farther down, there is a way to put it on there and how to move it. So down here under indicators, it's one of the options, date time axis, and by just moving it up and down with these triangle arrows, and notice this little blue arrow that moves with it, it'll help you position it exactly where you want it.